Good morning. Welcome to today's live broadcast, All Talk, No Action. Why is corporate banking so difficult? My name is Luke Adebayi and I'm a Business Development Manager at Capital International Group and your host for today. Today I'm joined by an expert panel. In the studio today, I have Jade Zorab, Managing Director of Amber Gaming, Paul Gallagher, Chief Executive of IOM Company, Kavifa Rajapalan, Senior Velta Product Manager at Capital International Group. Online, we have Luke Fisher, Business Development Manager at Capital International Group, and Taj Ratta, co-founder of Small Screen Casinos. This session will be very interactive, so I would recommend downloading Slido on the App Store or visiting slido.com using the hashtag banking to get involved with our live polls and submitting any questions throughout this live broadcast. We know from recent times that corporate banking is becoming even more difficult than ever before, with industries and sectors finding it even more difficult to locate banking partners or operate as a business. So I'll come to Luke Fisher first to ask for his guidance and kind of his thoughts on the industry. So Luke, how do you think banking is changing with emerging sectors such as fintech, e-gaming and yachting?
I think banking in general, irrespective of sector, is becoming more and more difficult just due to the increasing AML CFC controls, the ever-demanding regulation that banks need to adhere to, and actually having the CDD requirements that entities need to actually onboard in a timely fashion adds to everything and makes it difficult with legal entities getting banking. That said, the larger high street banks typically have a lack of appetite to take on new industries through lack of knowledge and understanding, that being gaming, yachting, aviation, that sort of thing. So typically the expertise sits within the corporate service providers. That's where the local and knowledge is of those sectors, and having the lack of understanding at the bigger high street banks actually is a barrier to entry when trying to seek banking solutions. Also, the demands of high street banks actually request clients to look at using other services and products that they offer. So using their investment products, having minimum balances, all are barriers to entry when clients are actually seeking a banking service and solution in this day and age. So I think generally speaking, banking has become more difficult, and it's trying to work out how banks these days using digital platforms can onboard quicker and easier and remove those challenges in respect of onboarding from banks.
So thanks, Luke. And that kind of transitions nicely to you, Jade. So as someone within the local kind of corporate service provider market, what are kind of your blockers as a service provider for both, I say, you and your clients?
Yeah, so I think, one thing that Luke touched on is just a lack of appetite, potentially. We look after a large proportion of gambling clients. That's what we do. The gambling sector is deemed to be a high-risk sector. So for our remote operators, that brings with it some real challenges, because when we have, set up and established their businesses, ultimately that service becomes really important, both in order for them to obtain licenses that they need to operate, and also, of course, to deal with all of the operational matters that come to hand. So things like paying expenses and being able to trade and to operate their businesses successfully.
Super. And that really plays well to our kind of first poll that's going to come on the screen. And as I said before, use the hashtag banking to get involved. We'd really like to see your answers to this. So the poll question is, to date, what issues have you faced with your current banking partners? And there's 4 answers on the screen. So number 1, payment processing times and payments held. 2, lack of understanding of business. 3, no relationship manager to speak to. And 4, don't understand the risk of your business. So as I said before, download the Slido app, visit slido.com and use the hashtag banking to get involved with that answer. So based on that poll, Jade, it'd probably be good to understand, so we've looked at you as a corporate service provider, but actually what is the knock-on effect of struggling to find banking for your clients directly?
Yeah, so ultimately, if a client can't obtain a banking solution, that becomes very challenging for them, both because, as I mentioned before, they will be unlikely to operate under their license. So in some jurisdictions, licenses won't even be issued until that bank account has been established. Equally, they won't be able to pay things like day-to-day operational expenses or indeed be able to trade. So banking by way of operational support to a business is absolutely key, and really having that provision early on in the life cycle of the company is equally very important, because there is so much that is reliant upon having a bank account in place. So effectively without that, options for operators are limited. It is something that we start considering very early on in a process of speaking to a client, because there is a lot to consider. So lots of due diligence to obtain, considering who we may approach that has the right appetite to consider that sort of activity. And ultimately, I think the speed of which we can come to some sort of an answer for a client is really quite important, because there is so much that hinges on the establishment of that bank account.
And I think we can see from that sometimes banking partners don't really necessarily understand the necessity or the speed that an account might need to be opened for their operation. So thanks for that, Jade. Taj, I'm going to come to you now, because you've been in the e-gaming industry for about 15 years now. So I'd really like to understand your kind of blockers and what you found within the banking industry to stop kind of operations you've been involved with.
Thanks, Luke. I think we don't really help ourselves as businesses, because we are largely complex businesses in different jurisdictions, different time zones. Sometimes we're remote gaming, particularly in our case. So that adds a layer of sort of high risk, if you like. And then you add into the fact that we're required to meet all these sort of money laundering regulations, etc. So again, that we are perceived as high risk, which means that high street banking, as Jade has alluded to, is not really available to us as operators. If we can't get a bank account, then we obviously can't trade. Fundamentally, even the merchants that we receive monies from, PayPal's and the like, will only settle to corporate banking arrangements. So without that, it's very difficult. Compliance-wise, there's a huge burden of information that is required, quite rightly, so that banks can understand who we are as individuals, how we operate as a business, processes, etc. To sort of counter that, though, one does go through a vetting process that is quite stringent with certain licensors. So, for example, Ordinary Gambling Control Commission or the UK Gambling Commission do put quite a heavy burden on us to provide lots of processes and information and due diligence. So we are vetted to some degree, and I suppose that's where the frustrations come, and where we as operators feel like we constantly come across hurdles and blockers from a corporate banking perspective.
And Luke,
yeah, great. Thanks, Taj. I think that's quite an interesting point, actually, that even though, especially within the gaming industry, if you're regulated by a local commission, actually, your banking partners should actually place some lenience on that slightly. If you're regulated by the Ordinary or Isle of Man Gambling Commission, there should be a bit more freedom with that, I think.
If I could jump in on
Yeah,
that
sure.
one, I think ultimately in an ideal world that would be brilliant. Obviously, as a bank under your license and your rules, that can't be relied upon. So we appreciate that, and I think that's where, a detailed knowledge and understanding of the sector is quite important. For us, we have those conversations with our clients early on, but that's why my previous comment about just being transparent, having a robust understanding actually as to what you expect is really critical, because what we try to do is reduce that cumbersome exercise for the operator by being transparent from the outset about what the expectations are. So we will obtain that due diligence and duplicate or triplicate or whatever is needed, and ultimately if there is a technology solution that can support us being able to onwards provide that to the likes of our corporate banking partner pretty swiftly to make a decision, then the operator is in good stead to have some sort of feedback soon. And indeed, if the answer to that application initially is no, the due diligence remains in date to potentially talk to other providers without having to go back and get new documentation.
Yeah, and I think technology is a huge part of what we're talking about today, and we've got our resident technology experts here. And I think what we found in quite recent years is that, the financial services sector may be slightly behind, I would say, in terms of technology. So could you just expand on what we've done differently here, Kavita?
So being a new bank, we've been quite lucky in the sense that we've used all the latest technology. We have it at our doorstep, and we've used it wherever it's appropriate. So, for example, all of our infrastructure is hosted on cloud services, and we've invested in excellent cybersecurity measures, and we use data analytics to understand our customers better and tailor our products based on their needs. And we also have an in-house tech team who have latest experience in all the tech stack. So altogether, we've used all of the technologies available to our advantage so that we can give a very tailored product to the customers. And we also have a customer relationship management software. So all of the internal business have a single view of the customer. So you'll often find that in banking, if you call up to different business or different departments, you'll probably be asked the same question probably 10 to 15 number of times. But we are trying to avoid all that by having a single view of the customer and providing the best service possible.
Yeah, sure. So from my perspective, how does technology kind of improve the customer journey experience? So a lot of clients we'll see these days have been involved in the fintech sector and involved in emerging technologies over recent years. But having a good technology and the service that's a bit more 21st century, shall we say, how does that improve that experience?
So when a customer comes and contacts us for a bank account, that's where client journey starts. So having done a lot of product research into what have been the difficulties in corporate banking, onboarding came up at the top. It's been quite a pain point because most of the corporate banking, the due diligence is quite complex. It can be, companies can be located in offshore jurisdictions, they could have complex structures. And like Jade said, there is not much of an understanding of new sectors and emerging sectors like e-gaming. So we've put in some effort into analyzing our products to see how we can make this journey a bit more easier. And that's where we came up with a pre-application. So this is even before the application. It's just where customers are requested to fill in a few questions, which takes them less than 5 minutes. But with those, we can just give them an immediate yes or no answer. So do we have the appetite to accept you as a customer or not? And I think it hugely benefits a customer. No one wants to hang around and wait for like 4 weeks to find out whether they would even get a bank account from a banking partner or not. And going on from there, the onboarding process is fully digital. So technology-wise, we have no borders. We can accept customers from different places because we accept documents and everything digitally. And once they have an account, they can register to Welta using a simple SMS and email. And we have two-factor authentication, so we are very much in line with what other neobanks offer. And from there on, they can set up their own user permissions and start transacting even the very next day. So everything can happen in a matter of 24 to 48 hours using all this technology. And that's how I think at each point we have tried to see how can we improve the customer experience, be it onboarding, be it payments, or setting up their own user permissions.
Sure. Thanks, Kavitha. And probably Paul and Jade, it'd probably quite be useful to get your opinion. So we talk about technology, but how important is it still to have that face-to-face interaction? So, we know clients like to see quite good technology out there, but actually, speaking to someone on the phone or having that face-to-face meeting, wherever it may be, how important is that from both your perspectives?
Yeah, I would say very important. In this day and age, I think people want the best of both worlds, don't they? There is a balance to be had. I think it's fair to say nobody enjoys a fully impersonal experience, and as good as any technology platform is, there is often sometimes an occasion where you need to speak to somebody because there is something that falls without or outside of the parameters that are set, or potentially you're just struggling to understand something. So I think the balance is really important. It is something that will differentiate you, I think, from other providers, and people want to know that they can pick up the phone and be supported where necessary. To touch on Kavitha's point from before, I think security is also, very important. So when people are exchanging what is confidential documentation, it is, I think, really comforting for them to know and understand that they can do that through a portal that is secure, but that they can speak about perhaps details about their operations to a relationship management individual firsthand if they need to. And yeah, I think finally on that, we must consider that individuals in this day and age that we are working with are based all over the world. So I think what that enables them to do is use the technology systems at a time that is convenient to them, and then allows flexibility to talk to individuals when I suppose both diaries align.
Super. Paul, your thoughts?
I would agree actually with what Jade's saying there about getting that balance between personal service and useful tech that actually works and is quick.
Yeah.
I think that's the important balance to get. The key for us, and we don't have a lot of sort of higher risk clients in gaming and things like that. Our client mix is generally quite standard in terms of risk. And the key for us is just a smooth onboarding process, a single point of contact, and as I say, tech that actually works. And if you can get that balance right, then you're already ahead of the competition.
Super. Thanks both. Now, if we turn to looking at versification, so quite often what we might find, or what we might be worried of, is getting a letter from your banking partner to talk around, you've got 30 days to close your account because you're now outside appetite, or they might have changed their kind of look towards that sector in particular. So Taj, if I come to you next, why might an entity open various bank accounts with various banking partners, and why do you think that kind of happens in this day and age?
So I think to your point there, thank you, Luke, as exactly that. Sometimes you might get a bank that turns around and says, yes, you've got 30 days, our appetite has changed for whatever reason. In our case, our corporate banking provider went bust. Wirecard is widely known, and we were looking for a new home, and Capital has been that sort of perfect home for us. We operate multiple accounts on several reasons. One is to diversify risk in terms of funds held, so that one doesn't encounter a similar sort of problem to banking going bust, which one would never have thought was possible many years ago. But since certain events have happened in life that even money in banks didn't seem to be safe. But also a lot of the e-gaming or corporate banking services available to e-gaming companies doesn't often have a full complement of services, and that sounds odd when you think of your own personal retail banking experience from your own personal account. Sometimes you can't use FX, sometimes you can't do SWIFT payments, and things like that. Thankfully, we don't have any of those issues with Capital, and that's why it's such a perfect place for us to sort of settle with our corporate banking.
Great, thanks, Taj. So, Paul, as someone that works within a CSP market that looks after a multitude of different sectors, we've looked at the gaming industry a bit, but I thought it might be useful to come to you to look outside of that. So what are your kind of bugbears when it comes to kind of banking partners personally?
Yeah, I think the main bugbear is a lack of customer service and customer focus, and I think that then leads on to other problems. Quite often you'll find onboarding, and Kavitha's touched on it earlier, takes too long, and that's the one thing that clients don't like, is that lack of certainty and that the inability to plan ahead and know, is this going to take 2 weeks or 2 months or longer in some cases. So for us, it's about finding a banking partner that wants to focus on the customer as the primary focus, and have a good relationship with them. Finding out, will you do the banking, or do you not have the appetite for it? That's fine. You go on elsewhere. And to be fair, for our standard risk clients, for the most part, banking partners do want to do the business, but it just takes them too long to get to that point. You pass through too many departments, and there's an inconsistency of approach. You repeat yourself, and there's a sort of fundamental lack of understanding of the business in most cases. People who perhaps don't have the necessary experience to deal with it. So those are the sort of main areas of focus, but it all comes back to this idea of let's concentrate on the customer, making their journey as sort of painless as possible.
Yeah, and I think it's quite clear that they are these emerging sectors, and actually as people in the industry, you kind of need to adapt and learn these new kind of emerging markets. The fintech industry as one, for example, but it seems as though some banking partners don't necessarily want to join that curve and maybe want to just stay within that bucket that they have at the moment, which is interesting. So we're going to come to our second poll now, which will come on the screen. So as I said before, join us on slido.com or download the app from the App Store. So the question should be coming on the screen now. So when choosing a corporate banking partner, what is a critical aspect that you look for? And there's 4 options on screen. So 1 is fees, 2 is client service, 3 is onboarding times, and 4 is transparency. And as I said, use the hashtag banking to get through to the poll and use it to submit questions for later on in the session. So I'm going to come to Jade, Paul and Taj now. I'm interested to hear your answer to this. So what would an ideal banking partner look like? So if you were going to choose, 3 to 5 top things, what would they be? So I'll come to you, Jade, first, if that's okay.
Okay, that's fine. I think an ideal banking partner is firstly relevant to, this is me being very selfish, our sector, is somebody who is transparent about their appetite for risk. So transparency to us is key. We've all spoken before about just wasting time, which none of us have, and it's just frustrating for all parties involved. I think that transparency kind of lends itself and walks right into fees. So we fully understand, as do our clients, that this needs to be a commercial arrangement. Often there is a lack of transparency around, well, what is the expectation if this is to be onboarded? And account opening fees, transaction fees, it is understood that that is the cost of doing business, but sometimes even that is quite challenging to obtain. And then, of course, finally, I think it speaks to my point before around just having that balance between a very robust technology platform and solution that facilitates onboarding specifically and actually the transactional arrangements down the road that is secure, coupled with the relationship management hand in hand.
Yeah, and for you as a kind of corporate service provider, you have to then, you're providing your client a service, so then you have to kind of invoice for that service. So if you're spending 3-4 months with a banking partner and then you're told no, I suppose that's quite a difficult conversation to have with the client then, isn't it?
Yeah, it is difficult because we obviously incur, a load of our time trying to undertake that account opening for our clients, but equally, we work in partnership with all of the parties, the service providers that we engage with, whether that's corporate banking or other operational partners that a business may need in the tenure of their life cycle. So a negative outcome, particularly one that is delayed, reflects really poorly on ourselves as well. So that's why, back to my first point, transparency is really quite important, so we can in turn have a really candid discussion with our clients.
Great. Paul, coming to you for any comments. What does your ideal banking partner look like?
Yeah, it's someone, touching what I said before, it's someone who will provide that personal service, both to ourselves and to the underlying client. And it's about focusing on that experience and making sure that things go as quickly as they can. Even just simple things like dropping a quick email to your relationship manager and getting a response. That's actually, these days in the industry, is quite unusual. Yeah. Sometimes you can wait days and weeks for a response. So little things like that make a huge difference. And just as I mentioned before, just that customer journey, which isn't, it's a bit of a corporate phrase, but it's true. You just want the customer to have minimal pain, and let's get this done one way or the other as quickly as we can.
Yeah. Interesting. And so if you have a new client, for example, and they, are looking for a banking partner, do they kind of place reliance on you to choose that banking partner, or do they like to find out a bit more information or even meet with that banking partner before they even make a decision? Yeah,
it varies from client to client with us. Some are wholly reliant on our suggestions and opinion and recommendations, and others have a strong idea of what they want. We find quite a few clients who still want to deal with the sort of traditional tier 1 banks, if you want to call them that, because they feel there's a safety and security and history about them, which is understandable. But then when you give them a comparison in terms of service levels, speed of response and things, actually, sometimes people can be convinced to go elsewhere and try different models. So yeah, essentially, it really does come down to the individual client choice.
Yeah, sure. Taj, coming to you online now, what would your ideal banking partner look like? I'd be interested to hear your thoughts.
Well, I think we're happy with Capital. I think that would be our ideal banking partner for anybody that's interested in opening an account. You've got a great pre-authorization process, the single point of contact, which has been touched on before. Fees are very reasonable, and you have a full complement of services, which for us as a business is actually amazing in one place. I can't underestimate by saying that online banking, as you see from a personal perspective, is now available in a sort of corporate capacity. And then sort of practical things like FX conversion, multi-currency accounts, and just having a sort of layer of security that allows us flexibility from an operational standpoint to have multiple sets of permissions for authorizations and pre-authorizations, etc., to fit our corporate structure and our sort of processes. So yeah, I mean, think you tick all the boxes as far as that's concerned, and of course having that sort of personal relationship with the account management team and that level of contact and support every time there is a query. And vice versa, when you guys have a query, that there is that sort of communication channel. It's so worlds apart from what you would get from a high street operation.
Great, thanks Taj. Luke, I might just come to you on this question actually. I think quite a lot of dialogue we've had in the past is around what are kind of the differences or the advantages, disadvantages of a EMI, electronic money institution, and maybe a licensed bank. Could you maybe tap into that slightly for me?
Sure. So I think given the difficulties in these industries getting banking, they do try and choose an EMI, whereas it's not a fully regulated banking institution. It has different legislation it needs to adhere to. Typically, you don't get an account in your own name. It would be in the EMI name for further credit to, which then, as an operator or a merchant, would have difficulties in paying money down to that account from PSPs, from the underlying client. So I think from an EMI perspective, there's hundreds of them around, but for license conditions of gaming operators, for corporates, they do want a corporate banking regulated solution as opposed to an EMI, but EMIs are so more forthcoming and onboarding quicker. I think that's where Capital are trying to bridge that gap between getting clients onboarded quickly and efficiently into a fully regulated institution, as opposed to going to those EMIs where they don't offer the same level of security.
Great, thanks Luke. And quite often I think EMIs actually buy banks in a box, as they say, so to try and build their operation quite quickly. So Kavitha, I'd be quite interested to hear your thoughts on kind of a bank in a box. So what are the kind of advantages and disadvantages of having this and not really having that steer on what you kind of want against the customer experience?
So the clear advantage is for bank in a box is time to market. So you can get your banking solution quite quickly into the market. But disadvantages is also the lack of customization and loss of control. And our product strategy has always been to own everything that our client interacts with. So that's been the focus for us. So when we did a lot of product research on the bank in the box product, we soon found out that we would not have, or the lack of control and the lack of customization into the customer experience. And having a very customer-centric approach for our product, it was very important to us that we took in the customer feedback and tailored our products to their needs. So for instance, I was talking about onboarding previously. Say for instance, Isle of Man welcomes another sector like e-gaming in future, and we as Capital have the risk appetite to accept that sector. Our solution is quite well placed to adapt to the new sector and roll out an onboarding or solution which is catered to that very specific market. So customization and control over our product roadmap has been key for us to choose to develop our own products.
Yeah.
And if I may add to
Sure.
that, Luke, I think one thing from a CSP point of view is that we need to have suitable controls in place by way of authorization of payments. And so dealing with the solution out of the box means that there is really limited opportunity for us to work with a provider to have that level of control in place. So it is often the case that we need some bespoke solutions done to that platform to make sure that we have those controls, and to grant our clients in turn perhaps view-only access, where we're dealing with solutions that are, straight out of a box, as the name says on the tin. That then becomes quite difficult in turn. So to be able to work with a provider who understands technology and who can help us to implement those controls is really very important.
Yeah, absolutely. And I think talking about kind of these bank-in-a-box solutions, quite often they are legacy systems, and then institutions spend 3 or 4 years trying to upgrade them. And surely, Kavitha, that poses some kind of security risk, and then there's kind of other operational issues that are involved in that. Could you maybe expand on that a bit?
Yes. So, I mean, knowing some neobanks, which some couple of popular neobanks initially were actually based in the bank in the box solution, and what happens when the infrastructure of the bank in the box goes down, the customer, the neobanks cannot serve customers because their whole infrastructure goes down. And this has typically happened in the past. And so basically we want to enrich the customer experience, and we don't want to go down that line. And we also have voice of the client forums where we collect customer feedbacks, and we also follow an agile practice. So we are able to update our product needs according to customer feedback very frequently. We have monthly product cycles, and we can even release more often if need be. So we are constantly looking to have a continuous improvement and not get bogged down by legacy systems. So if you see banks with legacy systems as well, they've probably developed technology about 2 decades back. So it becomes hard to maintain, and it's very tough to keep on top of it. And for example, in our case, all of our infrastructure is based on the cloud, which is very easily maintainable. So we also have a tech team who is quite experienced. So I think even legacy banks need to invest a bit more in tech so that they keep their systems updated, and they listen to the latest market as well as customer needs and keep updating their system. And that's what we are striving to do here.
Yeah, sure thing. So it's a bit like an iPhone update, really, when every kind of release comes through, which is good. But talking about kind of enhancements, what do you think the banking sector can do to really stay on top of these enhancements? So, things are kind of changing daily, weekly, monthly at the moment, but specifically with banks, what can they do to really stay on top of all this?
I would gently say that, look to your market, look to your, what your customer needs, and update your tech stack. It's very important. I mean, you can't maintain legacy systems. A lot of the traditional banks keep putting patches on top. So they do maintain their core banking system, and just to enhance the customer experience here and there, you can keep putting patches on top, but it creates a kind of a spaghetti infrastructure. So it makes it more complicated than necessary. So I would generally say that, to keep on top of it, keep looking for latest market trends and see what your customer needs. So we have e-gaming is a big sector in the Isle of Man. So if my product doesn't cater to that big sector, then I am not looking at my market, or I'm not looking at my customer needs. And most legacy banks also, to be fair, I feel that they offer standard products for standard customers. So it's not very tailored. So I think that's where I think we need to be more diligent on what a customer-centric approach.
Yeah, absolutely. And I think what we've gathered today is that everything should be as customer-centric as possible, I think, especially with the onboarding of account. So I've got a question for all of you on the panel now. So what would you like to see in the future of banking? So I'll come to Luke Fisher first, if that's all right, who's online.
Yeah, sure. I think it's much more than offering the products and solutions that clients need. They want to work with a reputable firm, regulated, licensed accordingly, but then who offer outside of just the solution, but a conscious bank, ESG friendly, looking after the environment, that sort of thing. That's the way that we see things are going now. So for ourselves at Capital, we know that ESG is going to be huge for us. We've initiated an EV car scheme for our staff here at Capital. Also, for every account that we do open, we plant 2 trees, just to reinforce that message from the bank that we are here for the long term. We are here and investing in the future, alongside technology and ESG. They almost come side by side.
Great, thanks, Luke. Jade, coming to you next. What would you like to see in the future of banking?
I think the word that springs to mind is responsibility, and speaks to Luke's point on ESG, but just I think everything we've spoken about today is just the basic premise of running a responsible business, whether that be being transparent to the market with whom you deal, having personal relationships, making sure that you're platform is maintained and obviously secure, and being agile. So I think it all kind of leads back into just being a responsible business, and maintaining that rapport just in everything that you do.
Yeah, absolutely. Thanks, Jade. Kavitha, I've actually seen in the news quite recently around kind of APIs and really drilling into other, third-party financial performance, accountancy, things like that. I'd like to be interested on your view on the future of banking, to be honest.
Yeah, so in Velta, we already have APIs and we integrate to payment providers and compliance providers because we want to offer the best in class. But really, when you say future of banking, I see embedded finance playing a big role. So with the manual workflows right now, if you say an e-gaming company might receive a lot of invoices from their suppliers, now they have to approve the invoices in their own financial accounting system and then log into Velta and authorize the payments. Now in future, I see this workflow being wholly simplified by using API payment gateways. So they probably wouldn't even need to log into their banking system, so they can use their own financial systems and just approve their invoices from their suppliers, and it should automatically talk into Velta or any other banking system, so they don't have to log into multiple systems to actually do that work. It should be self-done. And taking this a bit further, it would be far beneficial if the data is also available from the banking system directly into their financial accounting system, and it connects to their data warehouse, so they're more intelligent about data and they can make more intelligent decisions based on data.
Great, super, thanks Kavitha. Taj, I'll come to you next if that's okay, just to see your thoughts on the future of banking specifically.
Yeah, I think security, I think functionality, and account management, I'd probably put as my three things there. Account management is key as your product and your business, your products grow, and as our business grows, both from a number of products perspective, from jurisdictions perspective, and having that account manager or single point of contact allows us to communicate with you in an effective manner to expand the range of services that can be offered. And adding more functionality, like Kavitha said, I think it's just, a standard now that we're technology companies. We try and apply the sort of cutting edge tools that are out there. So to have a legacy banking system doesn't fit really with our ethos as a business. So being partnered with somebody like yourselves that are constantly updating the functionality for their platforms, like Kavitha said, will be amazing.
Thanks, Taj. And I think you made an important point there that, people that operate in the fintech industry can't really use a legacy system unless they have to, really. So, being 21st century and, being back in the 90s with a legacy system doesn't really comprehend themselves, really. Paul, your thoughts on the future of banking?
Yeah, I think, I'll bang on again about customer experience and customer focus, and I think that is important. I think there's also an interesting point that no one's really touched on yet. When we look at the speed of payments and security, and whether the wider banking community needs to embrace blockchain technology. I'm not a tech guy, but it'd be interesting perhaps to get Kavitha's thoughts on that and how the payment system it takes us 3 to 5 days to get an international payment from a client. If that was sent using, dare I say, cryptocurrencies, a dirty word for some in the banking sector, but you could get that almost instantly. So I think there will come a point when just by sheer demand from clients that the banking system is going to have to revolutionise and embrace that new tech. How it's done is not a matter for me, but that's what I see as the long-term future.
Yeah, so do we open up about blockchain, Kavitha? Is there anything you can input on that?
Not at the moment, but we also need to integrate with a lot more payment providers. So why payments also take time is because if we integrate with local payment providers, it would be far much quicker, and the more payment providers we integrate with, it also becomes easier to send payments, and payments without borders is what we should be aiming for.
Yeah, no, that's
I think
great.
blockchain, will facilitate speed for sure. Yeah. I think when you add cryptocurrency into the mix, that creates a whole wealth of complexity, particularly when considering the correspondence. So I think that will be in the distant future. But certainly I think the technology is fascinating, and to Paul's point, I think speed is obviously key. So it will be really interesting to see what happens in that space.
Yeah, it should be an interesting 2 or 3 years for sure. Well, thanks everyone. So we're going to go back to our polls now that we did earlier today and look at the answers. So we're going to bring up the first poll and the answers that were given. So the first one was, to date, what issues have you faced with your current banking partners? So we had 60% at lack of understanding of business. Second in line was no relationship manager to speak to at 20%. Payment processing times, payments being held at 10%, and don't understand the risk of your business also at 10%. We'll bring up the second question now. So when choosing a corporate banking partner, what is a critical aspect that you look for? So the top spot there was onboarding times at 41%, client services at 35%, fees at 18%, and transparency at 6%. So actually some quite interested answers, but not surprising answers, I think, either. Any comments on that or any surprises?
I don't think surprises there. I think onboarding times is something we've all spoken towards, so it makes sense to me.
I think it ties back into a lot of the points that people are making. Lack of understanding, it was slightly surprising that was top, but it makes sense, and it speaks to that sort of process-driven onboarding, where people don't really take an interest in what actually sits underneath the client's business, and sometimes it can be very simple and easy to understand once you know the basics.
Yeah.
And they go hand in hand, don't they? So if banks don't understand, of course that's going to lead to a slower time to onboard because you've got to understand it.
Yeah, no, absolutely. So we're going to open up for Q&A now. I'm actually probably going to kick this off with a question to all the panel, to be honest. So traditional kind of meetings, so I know we're in 2022 now, and quite often there's a talk around, reducing travel and obviously with the pandemic, etc. But do you think face-to-face meetings are still needed with your banking partner, and why?
I'll answer that first. I think the short answer is probably no. I don't think it's massively important. I think what's more important is good service, however that's delivered. I think face-to-face meetings with a relationship manager from time to time can be helpful, but when you've got international clients, most of the time that's not possible. So strong relationships, however they manifest themselves, I think are important, but not necessarily always face-to-face.
Yeah, I would say it depends on the client and the nature of the business and its activities. So certainly for those larger clients, meeting them face-to-face reduces risk. I think that's quite an important thing, to have met them face-to-face. You can develop, I think, a far stronger relationship in person than you can otherwise. So I wouldn't say that is necessary for every single client, but certainly for a proportion of them, it would be advantageous to do. We are very fortunate in this day and age that we can rely upon technology to meet people, I suppose, virtually. But I do think there certainly is benefit for a certain proportion of clients to have met them face to face.
Taj, what are your thoughts on this? Do you still think traditional kind of face-to-face meetings are still kind of needed or required?
I think initially, early doors, it is necessary. You need to get a feel for that sort of customer. We need to get a feel for you. And we need to establish a bond and a relationship on how we can work together and capabilities on both sides. And then going forward, to have a single point of contact or to have an account manager or a team that you can access is probably just as good, and then you can sort of catch up on a biannual, annual basis. I agree for larger, more complex businesses, their needs are changing on a sort of more regular basis. There may be a requirement to sort of be face-to-face and sit down and discuss things that perhaps take some time to percolate and explore it face-to-face. So you can never discount having face-to-face meetings, I would say. But generally, the point is that to have a good account manager or to have good support and good service from your banking partner, as Paul said, however that's delivered is very important for facilitating business on a just general day-to-day basis.
Sure. Thanks, Taj. Luke Fisher, I've actually got a question come in for you, specifically around ESG. So do we measure our carbon footprint, and have we set a goal of becoming carbon neutral? So over to you for that answer.
Yeah, it's a very interesting one. As a business, as a group, we've set the goal to be carbon neutral by 2025 with the introduction of the EV car scheme, with cycle to work, walk to work schemes, things like that. We're doing everything that we can in the likes of business travel. So business trips, we're looking at more ESG friendly ways to travel, taking the boat, taking the train, as opposed to those flights into other jurisdictions. There's a number of different things that we are doing at Capital, as part of our conscious capital way of working, just to reduce our carbon footprint. And that goes into surveys for every member of staff to understand each and every individual's own carbon footprint and how that attributes to the whole group's output, essentially. So as a group, we're doing everything we can to reduce our carbon footprint, and hopefully by 2025 we will be carbon neutral as a large organisation.
Great, thanks Luke. And Kavitha, I've got a question for you now.
Okay.
About product development. So you've been asked what product development there will be in the future on Velta.
So we have a lot coming on in the future. So the first thing immediately, probably in the next couple of months, we have is a secure communication channel through which clients can communicate with us. We understand that clients share a lot of confidential documents with us, and we need to be as secure as possible. So we're introducing an in-client communication, so wherein the clients can log in into Velta and talk with us, just like your Outlook, but inside Velta. So that's the first in line. We're also we're thinking about an app service. So right now Velta is a desktop service, but we've been hearing a lot of customer feedback that payments or authorization through app will be quite useful for the customers. So that's also we are considering, and we are researching towards an app-based product. And the next in a couple of months, again, something is we'll be able to accept trust clients into our product as well. We are rolling out an onboarding journey for them. So that's something we're looking forward to rolling out as well.
Okay, great. Thanks, Kavitha. Luke Fisher, another question for you, I'm afraid. Can you talk about our e-gaming offering in more specific, so what we can actually do for any new clients, please?
Sure, of course. So since Capital launched its banking offering on the 1st of June last year, we've taken over 90 clients in the bank from an e-gaming nature, that being your B2C operators, your B2B operators, software providers, IP license holders, that sort of thing. So we offer a very unique service to those gaming clients. With that in mind, we have clients who are licensed in the UK, in Malta, in the Isle of Man, amongst other jurisdictions, as well as offering those license requirements. So your player protection accounts, that sort of thing. So if you have an account with Capital, we can offer a gaming solution whereby we can make your payments, your foreign exchange, and we can offer you that player protection requirements in line with the gaming operator's license conditions. On a side note, due to the appetite of our correspondent, US dollar is not something we can facilitate for e-gaming, but we do offer 19 other currencies for our e-gaming clients, which, given we have coming up to nearly 100 clients in the industry, we don't see it as a negative, because we are still getting large numbers of inquiries from gaming clients, again, from a vast variety of different providers. So your B2Cs, your B2Bs, your software distributors, we offer a unique service to those gaming clients. And I think Taj and Jade mentioned it earlier, with the industry being perceived as higher risk, clients of this industry don't necessarily get to choose their banking partners. They are hindered by those who have the appetite to take it on. So at Capital, we have obviously identified this, and we understand the industry, we understand the sector, we have industry experts in-house, whereas typically you find your industry experts being at the corporate service provider or within the gaming industry and the operators themselves. We've took it one step further in having those industry experts in-house. So when a gaming client comes to on board with us, we understand what it does, why it does it, why it's set up that way, the various different structures that have been encompassed in the structure, and that sort of thing. So I think as a point, we are very e-gaming focused and friendly, and we're happy to have a conversation with any e-gaming clients regarding our proposition in more detail if that be necessary.
Great, thanks I think that's all the time we've got for questions today. I'd like to thank everyone on the panel today. Thank you for your insights, your experience has been really useful. And thanks to Luke and Taj online for their input as well. It's been great to chat to you. As you can see on screen, you can contact us at cib-bd@capital-iom.com to see what Capital International Bank can do for you. So we are a licensed bank in the Isle of Man, offering corporate banking only at this stage with local pragmatic decision making, and our USP being around account opening, with standard risk being open within 3 to 5 working days and higher risk at 7 to 10 working days. So please do reach out to us and see what we can do for you. Again, I'd like to thank the panellists for today, all of you for joining into this live broadcast, and to ELS for hosting us today. Have a great day, and we'll look forward to seeing you very soon.